As I review 2021 returns for positions in clients' portfolios, I'm pleased with those investments that were positioned to track the index. They did, which was great. Yet somewhat disconcerting were some of the select stocks that had appreciated so much during 2020 were detractors in 2021. Let me provide two examples. In 2019, Amazon's revenues increased 20%, and its stock went from $1,501 a share to $1,848 a share, which is an increase of 23%. In 2020, its revenues increased 38%, and its stock rocketed up 76%. My clients were thrilled. Unfortunately, this year, the stock has taken a breather, so to speak. It has only appreciated about 4%. This is despite the fact that revenues are estimated to have appreciated 22%. Commonly, stocks can take breathers for 1 to 2 years. This happened to Walmart back in the early 1990s. Walmart investors got so tired of waiting that many wanted to dump the shares, and it took enormous convincing on my part to discourage this. All of a sudden, in 2 years, 1997 to 1998, Walmart stock almost quadrupled in value. Further gains followed, but patience was required. An interesting story is being written about Trulieve, which is another favorite holding of mine. During 2020, its revenues increased 106%, and its stock went from $11.42 to $31.62 a share, an increase of 177%. This year, its revenues are estimated to have increased another 84%, but its stock has declined 23%. Next year's revenues are estimated to rise about 63%. This is interesting because fundamentally the company has been making money, yet its stock price has suffered. Doing more research, one can discover Trulieve's doldrums is politically motivated because the federal government continues to drag its feet to legalize federal marijuana. Meanwhile, I continue to remain a Truliever. So for 2022, I expect the companies that trailed this year, i.e. Amazon, Trulieve, consumer staple stocks that have had to renegotiate prices because of inflation, and even leisure and travel stocks. These stocks ought to increase. I think some technology names ought to decline also, especially as chip manufacturers meet demand issues. Bonds also ought to continue to lose value as interest rate increases are being seriously discussed. This suggests that the upcoming year could be a tough one for pure S&P 500 index investors. Something like a single-digit return could be anticipated. However, some select stocks ought to be able to beat that. As always, if you have any concerns about your portfolio, give me a call at Armada Advisors, where we are charting a better course. And more importantly, I want to wish all of you a Merry Christmas.